Hello, my YouTube friends, and happy Thursday from sunny, well, not so sunny Las Vegas. I hope everybody's having a great week. We've had some great economic data this week. Markets are doing some really interesting things, so it should be a great video. Stick around. I'm also going to talk about a few stocks I've been picking up. Should be awesome.
Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
Good morning. Well, it's getting past noon, so not morning anymore. I hope everyone's doing well. I hope everybody's having a great week. The equities are behaving really well. And let's go into what's been going on because both PPI and CPI came in hot. So the Fed's going to have a really tough time cutting rates, making the market, quote unquote, nervous. When the CPI came out yesterday, the market started out down pretty good, but by the end of the day, at least the stuff I was looking at had reversed and was up a little bit. And then today, when the PPI came out hot, the market's continued higher, at least so far, having an extremely good day. Why is that? What's going on? In my opinion, and keep in mind, as always, this is just my opinion. You need to do your own research when it comes to financial decisions. Reach out to a financial planner. Do all the things you need to do for your investments and don't listen to me. This is just what works for me and what I'm looking at. But my opinion is there's still a lot of cash around and there's still bullish sentiment. So anytime we see a pullback, it's an opportunity. It's time to continue getting in, especially if you're paying attention to valuations. And I don't mean whether things are overpriced or underpriced, but the trend of the market and where things seem to be going. The other thing to keep in mind, which I talked about for a long time, is if inflation is still around, companies are going to make more money, and stocks are a great place to be to compensate for that. Like, they're one of the best risk assets you can put on to overcome inflation. Quite honestly, I think the media has a disconnect with inflation and what equities should do. So it's almost like it moves the opposite direction it should. So and I'm just going to pick Target at random. Now, I do think Target is well valued here, but that's not why I'm picking it to explain what goes through my head. If there is inflation and inflation is continuing, the widgets, and everybody, I hope you know what a widget is. It's just a fictitious item of things that a company may sell. So the widgets that Target sells are going to cost Target more money. Well, they have analytics of what their margins should be on the things that they sell. So as it becomes more expensive, they're going to charge more. As they charge more, their profits are going to increase and their margins are actually going to improve. So if there's still inflation and things are getting more expensive, the stock price should go up as well in companies that are doing okay because their profits should improve. Now, understand the one flaw here is that your dollar is also getting weaker, so to speak, which is part of the price increase. But when the economy is inflationary, generally that's a bullish sentiment for stocks. So the narrative that, oh, the Fed can't cut, so stocks should fall, is probably a bit of a disconnect. They'll have an initial pullback because of the fear that inflation's bad and the economy is going to crash and people can't afford the things that they're buying. But in the end, as long as the economy doesn't crash and jobs aren't lost, well, good for stocks because earnings should go up. Now, here's the caveat, because I think the Fed's going to get put in a really tough position depending on what happens with the new administration. They're beginning to fire a lot of people. If unemployment starts going up, the Fed will be put in a tough position where they should cut rates to help the unemployment index. At the same time, if inflation continues higher, they can't cut because that's just going to spur worse inflation. Gets them in a really tough spot. Interested to see how it plays out. I'm not really sure what will happen. I don't know how bad the unemployment will get. It may not be nearly as bad as anybody thinks. And even the stuff that they're talking about with tariffs or some of the other things, these might just be a bluff, and we don't know how much inflation that may or may not cause. So I agree with the Fed that they need to wait for the data to make any decision, but it's really interesting watching it play out. in the meantime, what I've been looking at in the trading account I use, now remember, the set it and forget it account, really, I don't make any changes. My goal in that account is to not trade. So I own companies I'm really happy with. I want to own them for the next 10, 15, or even 20 years. So I don't worry about the intraday ups and downs. I don't worry about whether it's a volatile company. I just hope I own companies that outperform. With the trading account, I've actually rotated out of some things into what typically is safer companies. I bought Whirlpool in the set it and forget it account. It's the only thing I've done. And I actually added a little on my trading account because the more I keep looking at it, it just seems like a great opportunity to me. I also bought some more Polaris, and I also bought a little bit more Target, all three for the same reasons, which is they're really out of favor. The valuation looks pretty attractive. And on the flip side, some of the Googles and the Amazons and stuff, there's so much positive information built into the pricing that I don't know if I see the upside the same way as something like Whirlpool. Now, the weird thing is about a company like Whirlpool is they're not having growth the way that the tech sector is going to. Like, where is the growth going to come from? I don't think it's really going to grow. I just think it's so out of favor that it's that good of a value. On top of it, they use less than 50% of their earnings to pay the dividend, and currently it's paying a 7% yield. Now, I'm not super attracted to dividends and yield payments, but it's really hard for me not to look at that and think, geez, they can really afford this dividend payment, and 7% return is pretty good. It feels to me, and again, I'm wrong a lot of the time, like it's a mispriced stock right now, meaning it's just fallen too far and they're not paying the dividend where I feel like it's in jeopardy of being cut. It's just a high yield because the stock's so out of favor, like the baby in the bathwater type of stuff. I I also feel like if the market corrects, if we have a recession and things slow down, companies like Whirlpool and Polaris have already priced in a bad economy. They're expected to not do so well going forward. So maybe they don't fall off so hard if we do go into a recession. Whereas the other companies, which are my biggest position, so I still hope I'm wrong on this thought process. So, which is kind of interesting to put on a trade that in a lot of ways you hope you're wrong on. Whereas in Amazon, if things correct and we go into a recession, so much positivity has been built into the stock, I think it could have a bigger correction if we go into a recession. Now, you guys who've been watching for a while, I think I don't really predict or see a recession coming anytime soon. There's a lot of news out there that makes it sound scary. I just don't see it that way, and I see that as noise. I've actually been really impressed how the markets have held up through this noise because, quite honestly, the accounts that I've been looking at, like, they're reaching all-time highs pretty much on a daily, if not weekly basis. And there's all this scary stuff going on that makes it sound like the market's correcting. The down days look pretty big, and maybe they start out down, and it looks real scary. But by the end of the day, week, month, whatever time frame, things seem to be working out just fine, which I think is great. And that's the type of market I will hope to have for a long time. Even the real estate market, which here in Las Vegas has slowed to a crawl, eh, I don't really see that causing a real collapse in prices. I think that it's just changed. There's certain states and areas that my thought process and how I picture it is they've changed. New York has always been overpriced. Same with California. Same with Hawaii. People say all the time, oh, they need some big crash to make sense because the people who live there can't afford homes. Well, there's a desirability of being in those places that, in my mind, is always going to keep them more expensive. I think since COVID and work from home, that has happened with other places that are nice places to live. For example, Las Vegas, Florida, Montana has had a big move. Same with some areas like Austin and Texas. But I don't really see that changing. I think these places that are desirable to live in have gotten more people who've moved there who recognize now this is a pretty nice place to live. And if my option is living in Las Vegas that doesn't typically have rain, gets snow once every, I don't know, 3 to 5 years. We don't have hurricanes, we don't have tornadoes. Like, there's very few natural disasters. The property taxes are relatively inexpensive. Traffic, as bad as it's gotten in my mind, because I lived here for 20 years when there was much less of it, really isn't so bad if I go to Chicago and visit my brother, or go back to New York, or when we drive to California where it's totally different. Well, it's a nice place to live. And when your option is there or looking somewhere that might be less expensive, like when I look on the map, Pennsylvania, somewhere like Pittsburgh's less expensive, which is a nice city, but you have the cold and the snow and all the other stuff that goes with it. Or Cleveland or Cincinnati. There's plenty of places where you can still find affordable housing. And the ones that have become less affordable, I'm not sure I really see that changing, despite that it's more expensive than ever. The rates are high, the prices are high, but I think that really does just continue, and that's just the way things have gone. Similar to a price of eggs. Now, I know eggs have had the bird flu, so it's obviously a little bit more impacted than some. But one of the videos I did a long time ago, or in a few of them, is inflation is inflation. Your house isn't going to be separated because it's an expensive asset. But if eggs and milk and everything is going up and doubles in price, so does real estate. Now, it doesn't quite double if they're raising interest rate because the cost goes up in terms of the monthly payment. But the total cost, in the way that I think of it, kind of has doubled when you combine those two. And they do that to slow down the cost of housing in hopes of keeping it affordable and so that things don't get overheated. And then where I see a bit of a disconnect in our president, who's been yelling at Powell that he needs to cut rate to lower the mortgage rate. I don't know how to say it because I have no issue, but there seems to be some disconnect in understanding of what the Fed does and what short-term rates are and what mortgage rates are. I mean, mortgages are much more interrelated with the 10-year Treasury than they are with the overnight lending rate that the Fed does with the banks and the interbank market. So the Fed cutting rates, which, if any of you have been paying attention, doesn't necessarily equate to lower mortgage rates. In fact, the day that they cut the first time the 50 basis points was the best rates where mortgages were. And since then, they've actually gone higher while the Fed's been cutting rates. Now, I said this 2 years ago. It was kind of what I was predicting, which is as the short term interest rates come down because things start improving, the yield curve will probably uninvert. It'll start to make more sense because I didn't see a huge recession, and the inverted yield curve is an indication of a recession. I thought things were different this time, despite a lot of the YouTubers yelling and screaming of every time this happens, we have a big recession. That's not necessarily the case. And at least for the past couple of years, what we've seen is the yield curve uninvert and things start to actually normalize. So it's interesting to me that the news is making it sound so scary and not discussing that really we have lived through a soft landing. That doesn't mean things can't change going forward, but at least for now, the Fed's done a pretty good job. I recognize they were probably late to raise rates, but since then, despite whoever gets mad and judges their decision, they've really done a good job of tempering things. Now, this is like the third or fourth month in a row where CPI and PPI seem to be going the wrong direction, which is why I say it makes it really hard for them to cut rates because it does seem like inflation is stickier and not getting down as far as they would like. But 2% is just kind of a made up number and not anything that they should really have to stick to. And we are restrictive because the overnight lending is higher than where CPI is. So hopefully we don't see it really start to spike and put them in a bad position. Well, that's what I see going on in the economy. Again, I really like Whirlpool here. It was trading around $100 earlier today. It got below that past few days. And at a 7% dividend with earnings that have plenty to be able to pay the bills, see it as pretty attractive right now. I think everything is. I'd just be cautious because, to be fair, the noise gets to me too. So I worry, but I'd rather be invested than not invested. And if there's one thing I could tell everybody, do your best to save and put away for a rainy day. Have a great one, and I'll talk to you soon.